Well, good morning and welcome to another webinar in the series we've run on financial centres of the world. Today we have a focus on Frankfurt with Hubertus Väth, Managing Director of Frankfurt Main Finance, and we're looking forward very much to seeing news about developments in Frankfurt. Next slide, please. Just to introduce myself, I'm Mike Wardle, Director of ZN and Head of Indices, so responsible for publishing the Global Financial Centres Index, the Global Green Finance Index, and the Smart Centres Index. Next slide, please. And briefly to say thank you this morning to our sponsors. Our sponsors are very important to us. They allow us to range far and wide over the fields of finance, innovation, technology, science, in this webinar series. And so a sincere thank you to all of our sponsors and those who engage with us. In terms of the program this morning, my role is very much to get out of the way in a moment and give the floor to Hubertus. And just say we have questions towards the end of the session. For those of you who have not used the GoToWebinar platform before, you'll see on the dashboard that comes up on your screen a question section. If you open that, you can type in a question which will come to us. And please, at any point during the webinar, get your questions in just as thoughts occur to you. So we've got about 45 minutes for the whole session, and really looking forward to hearing news from Frankfurt Main Finance. Over to you, Hubertus.
Yeah, thanks very much, Mike. It's a great honor and pleasure to be a guest of your FS Club and to present a little bit about Frankfurt this morning, as we are happy to be back on stage, if I may say so. Let me tell you a little bit about Frankfurt Main Finance, and some of you might have heard of us, probably not each and everybody. We are the voice of Germany's most important financial center. We have a total, actually, of 4 financial centers in Germany amongst the top 30. So typically Germany is very dispersed, typically very decentralized. Frankfurt is by far the #1 financial center in Germany. Frankfurt Main Finance as a voice was founded 2008. Some may recall it was at the height of the financial crisis then, and we had our hands full with pretty tricky issues at that time. Today we have 70 members. We are financed by members, including the state, the cities, as well as numerous financial market players like stock markets, banks, and even private and public universities. What we do is we pool the strengths of the players of the financial centers, we make aware, we talk about it, and as I'm sure you pretty much can appreciate, Brexit was probably the #1 topic over the last couple of years. To give you a little bit of a sense what happened is on the morning after the Brexit referendum, we've been basically out and talking with a clear message that was called "Welcome to Frankfurt." Not very many people expected the result of that referendum to go that way. I had the privilege to talk to some of the leading lights of the Remain campaign at that time. So we had an early warning when the Financial Times had on a front page article the issue that a list was remarkable by its absentees, and the list they were referring to was a list of those speaking out for Remain, which was a cornerstone of the campaign for Remain. So ever since, it's been a ride ever since that referendum, and it's also been a ride of where Frankfurt has been. In 2008, when we were founded, it was a GFCI #4 at that time. We were ranked 9th, pretty much like we were today, but it was from there quite downhill. As you all can recall, Europe didn't do a particularly good job in managing that financial crisis, even though it was caused in the US. The Europe financial centers suffered the most from it. And we all may recall it has been also the 15 years of rise of Asian financial centers, and you've seen that. But Frankfurt is now coming back, and that has a lot to do with Brexit, which I mentioned earlier on. Let me now move on to some of the reasons which I believe have changed that very perception. Number one is Frankfurt is the big winner from Brexit, not in numbers of companies. There's clearly Dublin, even Luxembourg that have more, but when it comes to banks, and it particularly comes to big banks. Why is that? 11, you see that in the pie chart, 11 of the big banks have made Frankfurt their new European hub, which they ought to choose, because passports have been lost as a result of Brexit, and that leads to the very fact that a lot of the financial business, not all of it, but it's approximately 50% of the financial business, could no longer be done out of London with the European Union, with entities within the European Union. So 60 licenses have been applied for. 675 billion of assets have been moved. This number is from our central bank, the Bundesbank, as of early November. We believe it's significantly higher by now, and it eventually will exceed 1 trillion in assets. That's massive. And you see 2,500 jobs that needs to be revised upwards now to 3,600. This is, by the way, not a rough estimation. It is statistics from our social insurance, and the 3,600 are as we were in the mid of 2020. So by now we're pretty optimistic that it's more than 4,000 jobs, not people, jobs that have been moved, because more than half of these jobs have been taken up by local residents, because we have a deep and highly qualified labor pool. And that brings me to the next slide. What you see is here a number of those reasons. I called it at that time communication by spreadsheet, because a decision on where you want to locate your financial institution is a very complex one. You have to take into account, we've identified about 50 indicators, 50 criteria on which you choose, and obviously things like tax are important, things like availability of talent is important, labor unit cost is very important, but also the size of the economy, and Germany being the biggest, obviously, and the very ranking, because when you do business with, particularly between the big investment banks, both the size of the very place you're working from, as well as the rating are key. So you see in the European Union, you have 3 AAA rated countries, Luxembourg and the Netherlands, but Germany being by far the biggest. That clearly is a plus when it comes to counterparty risk assessment. Germany also ranks number 10 in English proficiency, only after such very cosmopolitan places as Singapore, Norway, or the Netherlands. And after the US, Germany is considered to be the world's number 2 most popular work destination. That actually came as a surprise even to ourselves. So obviously work is good, but not only work is good, also life is good. Frankfurt is not only ranked as the 7th most important, most competitive economy in the world, it's also ranked as the 7th most livable city in the world by Mercer. So it's not done by ourselves. It's Mercer doing that out of London, and we rank pretty good. And when it comes to very important topics in forward-looking, such as fintech, Germany, and I'm talking here consciously about Germany because clearly Berlin has taken the lead here in Germany. We are the 4th largest fintech market in the world, and hot on the heels of the UK when it comes to fintech. And Germany also adopted one of the most comprehensive Corona packages, which, by the way, led to the fact that there was less than 2% in personal income decline in Germany after Corona. So we've been doing fairly well. There's less than 10% excess mortality in Germany, despite our lockdowns have been okayish. I mean, nobody likes to live in a lockdown. Have been okayish and overall fairly sensible. We've had not that great a start in the vaccination campaign. Obviously, there's pretty much to learn here from the UK. But in the run-up to it, our mortality statistics clearly speak for themselves, and they're well much ahead. And if I may say so, and I'm quite proud, very close to Frankfurt is not only home to BioNTech, which is Mainz. It's 30 miles to the west, also 25, 30 miles to the east. There is one of the major production facilities of BioNTech Pfizer vaccination, where 8 million jabs come out every week, 8 million jabs. So we've reached now also 20% of population being vaccinated, but I think we'll catch up really fast. So I'm very confident that the promise the government has made that by end of July, every adult in the country will have had the offering and the opportunity to get vaccinated. So it's a fairly good. Certainly, you can improve on the one or the other side, and certainly there's some things which could be improved upon. But I think the overall efficiency, the overall workings of during the pandemic has been very successful, and the follow has been actually exemplary to the rest of the world. Let me come back to financial. Germany and Frankfurt is home to supervisory and monetary authorities, the ECB, the SSM, IOPA, which is the oversight of pension funds, the central bank, the BaFin, are all located in here. And what is a little bit underappreciated, because particularly when you look at the rankings, on the world rankings on financial institutions, there is usually something like a time lag. The German education system is obviously pretty good, otherwise the economy wouldn't be where it is. But it followed different standards and different rules. And it was only a couple of years back where we basically realized in Germany that we need to adjust our research institutions, our education system, to become more comparable with the rest of the world. That despite having 41 research institutions, 160,000 students, 22,000 of which are international students, and a majority of studies which you can do in English in Frankfurt, the rankings do not yet fully reflect actually the standards where we are, but you see it year by year going up, a little bit like you see the center, Frankfurt Financial Center, moving up the GFCI rankings. Frankfurt is also home to 170 nations. With the massive, we have a leading exhibition and fair, since we have 17 twin cities in the world, and we have also a significant fintech hub, but even more though, the leading network point when it comes to data transmission. More than 1,000 data networks are connected via DCIX in Frankfurt. So there is a little bit of a rivalry between Amsterdam, Frankfurt, Paris, Frankfurt, but we do have reason to believe that Frankfurt clearly is the #1 data hub on the continent. In addition, we have a top financial infrastructure. Deutsche Börse Group serves 200 clearing members. We manage a collateral pool of 49 billion, and clearing trades was 11 trillion every month. We've gained from London when it comes to interest rate swaps that are denominated in Europe almost 20% of the market share that moved over to Frankfurt. And besides being the 7th place of the most livable cities, which I mentioned earlier, we have music festivals, we have all sorts of things that make life great. And even though we've had to take a beating yesterday, my soccer team, Eintracht Frankfurt, is still number 4th and are very well on course to play in the Champion Leagues. So we're going to meet some of the big city clubs in the next season. So let's move on. Here we go. And if I have a look at my watch, I think I'm pretty much in time, even probably 1 or 2 minutes ahead. That would give us the opportunity to have a more intensive discussion. And I'm very much looking forward first to the external view of Mike, and thereafter to your question, which I'm very happy to answer.
Thank you very much indeed, Hubertus. If we just move on. And again. So I just wanted to give a brief view from an organization that watches financial centers and their performance over time. So looking at Frankfurt in the Global Financial Centers Index, just looking at the last 5 years, there is a clear upwards trend. So there's something going on which means that confidence in Frankfurt as a financial center has been growing. And as Hubertus said, we're up to 9th position in the latest edition of the index. But the really clear measure is that, firmly in the top 20 and on an upward trend. One of the things we do in the GFCI is look at areas of competitiveness. So we take groupings of the measures that underlie the GFCI and rerun the model to see where centers come out in that, just using the measures relating to those areas. And we see here, particularly in financial sector development, Frankfurt scores very strongly, I think reflecting the strength of financial regulation, financial institutions that are based in and around Frankfurt. Next slide, please. But we also published the Global Green Finance Index, and I just wanted to take a brief look again at Frankfurt in the GGFI. Again, the trend is upwards in terms of the ratings, both of green finance depth and green finance quality. But actually, Frankfurt does lie slightly behind other European green finance hubs. And just to say that Frankfurt, in common with many developed financial centers, is ranked higher for the quality of green finance than in terms of the depth, the intensity of green finance in the financial center. And this is really, I think, a message to say more green finance, please. We know you do it well, but let's have more sustainability driven through the financial system. Next slide, please. One of the things we also measure is connectivity, and we do this by looking at who rates who in terms of the GFCI survey process. What we see here is that Frankfurt is very well connected with European centers, but also has strong links to key centers in other parts of the world, places like Seoul, places Hong Kong and Chinese centers, Dubai, all places which Frankfurt has strong links with. And I think that reinforces for us the people who do well in terms of financial center leadership tend to be those that build good connections with other centers and are able to collaborate as well as to compete. And I think holding both of those methods of development in mind is really important for financial sector development. That was all from me, so we're going to move on to question session. Please just keep...
Mike, while you get the questions in, and let me probably comment on the 2 things which you mentioned. Indeed, what we've seen from the very beginning is Frankfurt has very, very strong links to Asia, and it's not by accident. What comes as a surprise to most people is that Germany trades more with China than France, the UK, and Italy combined. So we trade more with China than the three biggest other economies in Europe are combined trading with China. So the relationships with China are very good, very close. And we do work with Shanghai, we work with Beijing, we work with Guangzhou, we work with Shenzhen, of course with Hong Kong, and with Singapore when it comes to Southeast Asia. So Asia has been a clear focus. Frankfurt has been relatively weak when it comes to Latin America, and not very strong when it comes to Africa. We've been making some inroads when it comes to Middle East. It's been late, but Asia was always it. Of course, Europe will exclude Europe here, but Asia was always a focus, both of the economy as well as the financial center. And we all know where Asia stands, and we all know how the relevance of Asia has evolved. So that clearly was a plus that helped us. The other thing which you mentioned is green. I promise you, Mike, we're not comfortable of where we are, and we clearly will and want to address that issue. Like usual, we feel ourselves to be underrated. That probably doesn't come as a surprise to you, but it's not that we're here to complain. It's that we're here to look at how to make it more visible and how to make it more understandable. Because I believe we have a green and sustainable finance cluster here, which did great work, which educated the Ministry of Finance in its plan, which, by the way, we're going to hear fairly soon. We've been also privileged to be asking some of the issues on the matter. So and we're working on a program to make that more understood. And I believe that you will hear more on that space in future. And yes, of course, we have every reason to green our financial center, but even more important, to green our industry. And Germany has obviously been one of the biggest emitters in the world. We have a huge industry, a huge industrial base. So the key challenge we're having is the transformation of our economy, the transformation of our solid and very important industrial base. But I'm absolutely positive that we're geared to it, and that we'll take up the challenge, and we're up to the challenge. So stay tuned on that one.
We will. And I think it's probably very similar in Frankfurt to London, that the strapline for the Green Finance Institute in London is financing green and greening finance. And but they are both important aspects to bear in mind when you're looking at sustainability in finance. So let's move on to some questions. First of all, Bob McDowell, panel, asking whether you anticipate more banking consolidation in Germany. And if so, what are the drivers, and what do you think the impact of consolidation in the banking sector might be? If you don't think it is going to consolidate more, what are the drivers for that decision?
Well, that's actually one of the tricky questions. I think actually that we've seen in Germany a significant amount of consolidation. Germany used to be very, very high when it comes to number of branches and number of banks per million inhabitants. We're no longer there. Actually, we've seen in the savings sector and in the mutual sector a significant amount of consolidation. Basically, it's hundreds of banks that disappear every year, or at least dozens of banks. Hundreds of banks, probably a little bit exaggerated when it comes to the term of per year, but we have seen hundreds of banks within the last decade that have been consolidated. But what usually hits the limelight is a consolidation of the big beasts. Again, here we had the disappearance of Dresdner Bank, which was a big consolidation. We had the disappearance of the West LB, which has been a big financial institution. And well, will it continue? Yes, it will certainly continue. I think there is still a way to go. I think we're on a right track. We've been privileged, and sometimes it's a disadvantage if you're privileged. We've been privileged to have a fairly stodgy, solid financial institutions, not very spectacular in their returns, but very solid. With the negative interest rates, their business models have been under pressure, and they have to rethink the business models. But on the other hand, there is clearly a recognition of the fact that our very decentralized financial system was key to mastering the financial crisis of 2008 and mastering the financial crises thereafter. We never had anything that could be called a credit crunch. So the ability of the banks to serve the industry and trade and business have never been tarnished. It sometimes was at the expense of the profitability of the financial institutions. I'm sad to say that's a clear political objective in the country. The service of the industry and the service of the business with credit and is clearly warranted. But nevertheless, the shift towards more financing through capital markets is not only understood, it's underway. You see it in each and every place, and you see it also with a very good year when it comes to stock market listings we had with Auto One. Some of the more successful tech listing. I'm not making hints on others, but you see the shift towards capital market financing is there. We see a massive expansion of private equity and venture capital business. Germany has been a laggard on venture capital. No more. We've seen that expanding. So banks clearly will consolidate, continue to consolidate. We will see some names disappear. I will not speculate who they are and what's going to happen. There is one of the things that basically everybody waits for in the EU, which is cross-border consolidation. There are reasons why it's not happening at the scale where everybody waits for, but it is happening in a way probably some people don't see it on the surface. What I mean is a vertical consolidation. So you see along certain lines of businesses, like being prime broking, being market making activities, and so forth. So you see some financial institutions vertically integrate across the union in certain areas of business, but we don't see it big time cross-border consolidation yet. And that will have all to do with the banking union and the capital market union, which I think everybody would agree with me, we still have a way to go. My great hope was that Brexit would trigger a faster movement. We've seen some of it, but clearly COVID has slowed that development down. It's needed all the attention. But we'll see more. I think the plans are in place and they will need to be executed now.
Thank you very much for that full answer. It's quite a detailed question, I guess, on the outcome of Brexit, about whether you think that there's a possibility that London may become a centre for holding offshore euro deposits, in the same way as it became a centre for holding offshore US dollar deposits in the 1950s and 60s. And just wondering whether you or those around you have got any thoughts about how London interacts with the Eurozone in terms of particularly sort of offshore deposits.
Well, this is a very detailed question. I'm probably not able to give you a fully satisfactory answer on that one, but let me answer your question in a way that actually I can imagine that to happen very well. First of all, there is a very clear, the way Brexit is done, the way it is obviously understood, is that we will see a deviation. We will see a deviation in the regulatory environment. And when it comes to equivalence, we have seen that decisions are delayed. The only thing which we've seen is that by end of March, there was agreement reached on basically on how we will communicate in future on a semi-official way. But we don't have yet a clear structure on how we would handle deviations. So the very idea that equivalence would be a basis for doing business out of London with most of the union has its limits, and I may say has big limits. So I advise no financial institution to make really big business plans or big business models based on equivalence alone. It may help to overcome a certain period of time. It may bridge a while, but no more than that. To come back to your question, it's in a wider context. Will there be something like Singapore at the Thames, an offshore center for the region? I see some indications going towards that direction, but I also think that most of the regulatory framework in the EU was drafted in the city. It was drafted in London. So I don't see that much of it really going astray. What I, however, see in the Khalifa report, there is, from my point of view, very revealing, and I don't tire to highlight and hint that here on the continent, that this shows a way forward, and it's a way forward towards technology. It's a way forward to accommodate new technological development. And I use the vaccination as a great example. I mean, you've been blessed to have Kate Bingham as an avid venture capitalist looking at these things. Your understanding in the City of London of how to create ecosystem by creating a good environments for the technology is certainly something we could take a leaf or two on the continent. So I'll keep fingers crossed that we do, and I certainly advocate it. But that's the right way to go. And I recall, by the way, I mean, it appears anxious these days. But as you know, one of the biggest proponents of Brexit was Donald Trump. And when he visited the city at that time, he said, get over it, then we'll do a deal. And the deal clearly referred to how to handle technology, US technology companies coming and conquering Europe. And that's something which I strongly recommend not to underestimate.
Thank you very much. I think that's that last point on finance and technology is a very important point. One of the things we look at in the GFCI is we produce a separate fintech ranking as well as the main ranking. But we also ask people, what do you need to have in place to build a successful fintech center? And the first thing they tell you is availability of skilled staff. And the other one that's very high up is access to finance. And if you can get those two things right, you can actually build a group of people who've got the skills and give them some access to development finance. You're well on the way, I think, to building an ecosystem which works. There's a question from Olaf Jupter. He comments that Frankfurt is clearly a thriving spot in terms of green and sustainability, so supporting very much, Hubertus, your point. Referring to the International High-Level Impact Festival, organised mainly by a bank, the Series A events for sustainability, the Green Hub for startups in Frankfurt, so quite a lot of visible activity. And saying you'd quite like to know more about the Green Index. Well, those of you who do want to know more about the Global Green Finance Index, you can search for it, www.greenfinanceindex.net or Global Green Finance Index. And the next edition of the GGFI, GGFI 7, will be published on the 29th of April. There's an events page up for that, so if you're interested in coming to the launch of that, then please do take part. But also, Olaf, if you really want a more detailed discussion, drop me a line and we can have a conversation about the Global Green Finance Index. But Hubertus, good to know that you have some people who are seeing the visibility of green and sustainability in Frankfurt, and I'm sure that's pleasing for you.
It certainly helps, but you know, I'm a strong subscriber to the philosophy which has been advocated to many peoples, but I believe it was Henry Kissinger. The biggest room in the world is a room for improvement, so we'll have a long way to go. We certainly look very much forward to end of April to the Green Sustainable Finance Index. We definitely like to engage with your very good self, Mike, on the index and understand more about on how it's done, and we clearly are very positive that we will have to and will manage that transformation to a more green economy. And you see, actually, just a very small side note, on the very day the ninth ranking of the financial center in Frankfurt has come up, is Frankfurt all moved up a little bit on the national ranking of becoming more bicycle friendly. I know that for everybody who rides a bike, and I started riding a bike to the bank when I was still working with Deutsche Bank in the 1980s, and I can tell you it was sometimes quite a hazard of a ride, which I'm sure is still in quite a number of places. Things have improved, but there's still a long way to go. But again, on the very day of that rating, also Frankfurt moved up a little bit here, and we will manage a transformation here. And like always, transformations have to be balanced. Frankfurt is part of Germany. Germany is a very consensual society that makes it sometimes move slower, definitely, but they will move. And once it's in motion, it usually is hard to stop.
Thank you very much. There's another reasonably detailed question, I guess. Just wondering whether you have any concern that pressures on the euro will have the consequence of euro deposits being really concentrated in primarily German, Dutch, Scandinavian banks, and how you see pressure on the euro and its effect on financial institutions.
Well, first of all, the target usually shows you where the access to deposits, and clearly it's the Netherlands, it's other in a small scale Luxembourg, and it's Germany. We had a lot of discussion about what actually that means, and are they risk inherited and so forth. But clearly, if like I said, you're AAA rated, you're in the biggest economy. It's a very solid, throughout each and every crisis, a very solid economy. And there is a good place to have your deposits. I probably get a few phone calls thereafter from banks that, Hubertus, we don't want more deposits. You should know that. And I clearly understand that. But, well, I think the ECB made a very smart move with the way they adjusted negative rates, and they fostered lending by financial institutions and offered them even -1% lending facilities if they transfer that into loans. So that was I think that was a smart move that took pressure off German financial institutions. So I hope you still don't struggle with depositing euros in Germany. And I'm pretty sure in London, quite a few financial institutions would be happy to take offshore euro deposits. I'm absolutely positive about that.
I'm sure that's true. I guess a question which is future related. I think looking at financial centres following the COVID pandemic, which we're still in the middle of, and the global position is still very serious. But I guess the question is, how do you think financial centres, or what do you think their financial centre will look like in the future? When increasingly people, particularly in the Western Europe and America, are working from home at least part of the time. There's hybrid working arrangements. Cities become less important potentially in terms of place. I'm just wondering your thoughts about the role of the city going forward.
Well, it's a mix of questions which you're having. And let me probably start with being founded in 2008. It was kind of a relief that this time we've been part of the solution and not part of the problem, which we clearly were in 2008. And so it was good to see that the transmission of state programs into the economy run very smoothly, absolutely fast. And so that was good. That re-established some credentials of the city. I wouldn't say that we'd be back where we were before the financial crisis, 2008, but it was an important step. Number two, I honestly living in the city of Frankfurt, and I'm born and raised in the countryside, and not very far from Frankfurt. But then I moved and lived in a couple of cities, amongst them Singapore. My wife is a city girl. She would never allow me to move out of a city. And she tells me Frankfurt is about, she comes from a very big city. Frankfurt is about the smallest city she's willing to accept, but she feels very happy here and very comfortable. But so I don't believe cities are going to vanish. I don't subscribe to the idea that people would move out. Actually, that's what we've seen in Frankfurt for a very long time. Around the city, there are a lot of healthy, of prosperous, of green villages, cities, and so forth, which basically live in Frankfurt and where people move into Frankfurt in the financial center. So when you take a circle around Frankfurt, which is as big as the Greater London area, we're talking 5 million people. So it's significant. So the city itself has a huge impact on the region. So I don't see a shift out of it. I see, and what for me actually was the biggest concern is was threefold. Do we see some big defaults afterwards? Secondly, do we see a real estate a bubble bursting? Do we see some issues with real estate because we've had massive developments? We had more than 20 high-rise buildings going up in the city, so massive investments here. And the third concern is would we basically be able to manage that, I would call it, hybrid working environment? So that question probably answers part of your question. I believe it's going to be much more flexible. It's going to be hybrid. By the way, I'm in the office. I was basically most of the time. We typically had anywhere between 20 to 40% of the people in the office. We had from day one 50, 60, 70, 80% of people in home office, which would run very, very smoothly. No issues whatsoever. Of course, we've been looking at the most vulnerable that either had parents which were vulnerable or themselves for health reasons or had to use public transport. We told them actively don't go. We've seen that throughout the city. We also see a longing of coming together, of meeting, of seeing each other in person. So I think a lot of the changes will stay. I don't think we will see a big change in space taking up. Actually, we're just talking with our landlord about extending our lease for another 5 years, and I've talked it with the team, with the entire team, and be positive that we want to do it. And from what I hear from financial institutions, that's pretty much the same mood. So I don't see that issue. When it comes to bankruptcies and when it comes to loan losses, which is obviously a big issue, I think we're fairly safe, surprisingly safe. To be honest, I sometimes couldn't believe it, but the numbers are not that bad. We happen to be in the privileged situation that we have basically a spin-off of the statistics office of the European Central Bank within our office building, and I've been continuously talking to them because they have data on car loans, on residential loans, and on those various loan types. And the German economy does really well. It doesn't look that good, by the way. They also have some looks in the UK. In the UK loan folios, I think there is more to worry about. Obviously, also in the Italian books and the Spanish books. But again, Germany has managed that crisis surprisingly well and surprisingly stable. So, of course, we will have some, particularly in the hospitality sector. But it's much. If you would have asked me a couple of months ago, I would be significantly more concerned. But I'm an economist. I look at the numbers. I look at the figures. And the figures tell me that don't worry too much.
Well, thank you very much, Hubertus. We're out of time. It's rattled along. We've made really good progress. And so it just remains me to try to wrap up. First of all, again, thanks to our sponsors. We really do appreciate being able to range far and wide over a whole range of subjects. And it's down to our sponsors being able to enabling us to do that. We have just a brief reference to some events coming up tomorrow. An ESOP sofa. The ESOP is the employee share ownership program, which is part of the ZN work and offer. So if you're interested in that, please join us. And mergers and assets coming up on Wednesday, and a digital services bill. Looking forward to what legislation might hold in the UK in terms of digital services. And very topical, next Monday we have a session on whether the office building is going to become obsolete. So following up on Hubertus's comments just now. Those of you who want to take part in the Global Financial Centres Index, you can indeed take part in the survey, which is part of the index data. The link is shown up on screen. And we're now looking forward to the 30th edition of the GFCI being published in September of this year. So it just remains for me to offer some thanks. First of all, to all of you for coming along, participating, for your questions and engagement. Secondly, a very big thank you to Hubertus. Normally at this point on a talk, I'd be able to offer you a round of applause. But instead, because of the limitations of a virtual system, I can offer you only a very small round of applause. But thank you indeed for your participation and your openness to just engaging with the questions that came up. We look forward at some point to welcoming you in London or to coming to visit Frankfurt and to continue collaborating and working with Frankfurt Main Finance as we go forward. So thank you very much indeed for all your contributions this morning.
Yeah, thank Mike. Your warm words and your great smile made more than up for that. And thanks very much to be a guest of your club and for our conversation. We'd certainly want to engage more on the Green Financial Center Index.
That's super. Well, thank you very much, everybody, and have a very good week. Thank you. Bye-bye.
Bye-bye.